Good morning, traders. Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we have a look at what's happened on the markets over the past week and also form some views or perspectives on what we think the market's going to be doing in the coming days and weeks. We're a bit delayed in terms of putting this report out. It's actually going into Tuesday, the 3rd of October. But nonetheless, let's have a look at what's been happening over the past few days in the market and where we're seeing the market moving. If we look at the chart up on the screen, which is our daily chart of the top 40 to start off with, you'll recall, or at least our daily subscribers will recall, that as we saw the market pull back or retrace back into this 49,000 level, lining up with this previous price structure there, we had two questions on our mind really, which was, A, how far would we see the retracement going, and B, once the market reached a potential point of support, or once price reached a potential support area, would we then see the market push to the upside? Now, at the moment, what's happening is we've seen the market pull into that 49,000 level. It lines up with that previous price structure level right there. It hasn't pulled back towards that 38.2 level yet, which lines up with that swing, call that price structure / swing high level over there. Instead, what's happened over the past couple of trading sessions is we had a higher close, and then we have the market pushing up. Now, for now, we're still going to be a bit patient in terms of calling a particular direction, because what we'd like to see is one more higher high before we start drawing this price structure to the upside. And what's going to be interesting here is notice how the stochastics cross back up over its signal line, which is short-term very bullish, but it is pushing quite hard to the upside at the moment. And also, just looking at the shape of the daily candlestick, while it does put in the higher high and higher close, in fact, on from yesterday's trading action, market does come off its intraday highs quite a bit into the close. So this is going to be something to keep an eye on. Just based on the structure here, one would suggest it's still, while we have that bullish bias, we're still a bit neutral in terms of calling a particular market direction. As I said, we'd want to see the market push through, say, the 49,850 level emphatically first, and then we'd support further upside from here. So let's keep an eye on it. That's just looking at things through the daily lens. If we have a look at volatility, we had that volatility, call it spike or jump last week. It settled down somewhat, but it's still sort of holding up around those levels at the moment. So volatility in absolute terms, let's reflect on this quickly. In absolute terms, we are still at very low levels in terms of where volatility is. Ideally, I marked it up on the screen. That's our ideal range or zone for where we want volatility to push up into, and even beyond, in fact. But a minimum of 16 on this normalized ATR measure is where we would like volatility to be, and it's not been there all this year. So in absolute terms, still very, very low, and we're just waiting and hoping for volatilities to start ticking up as we move into the last quarter of the year. So that's what's happening through the daily lens. Let's do a drill down onto the 15-minute. I'm going to highlight a couple of things here. Some of them may be specific to what we discussed on the to our daily subscribers. First thing is just marked up on the screen. We'd highlighted this potential head and shoulders, but recall I did say that you needed the market to push down through that neckline, through that 48,700 level to open the potential target to the downside over here. That clearly hasn't materialized. We didn't get that trigger, and instead what we're seeing is the market's pushed to the upside here, and we've in fact, let's just put it in. Once we get past this point over here, there's the the lower close over there, then the market goes into a complex retracement really, and right here is where we get that push on break of structure. Just get all of that in, push up there, and we're going to get this break of structure to the upside, playing out right there. Right, so now we've broken structure to the upside. So we've got the short term, we've got our bullish hats on, and we'd look for the market to continue to the upside. Subsequent to that break to the upside, we get a little retracement over here. Let's just confirm it. 1, 2, 3. Yep, there's a retracement. We get the continuation move to the upside, and now what we're seeing is another retracement happening over here. A couple of things I just want to highlight over here. Firstly, this is a bit of a stretch move, I like to call it. You know, the market's pushed up pretty hard on this impulse leg over here. But at least that's, on that impulse leg over there. Shallow retracement, continuation, but not a great follow through. And then a deep retracement over there. So a couple of things you can see here, which I'm going to highlight. Firstly, let me get my Fibonacci retracement tool. We've put in a deep retracement. We're into that 78.6 retracement level over there. Let me just make it a bit bigger so you can see, which effectively means you can put your, or I would put my warning blinkers on to say just be wary of just going long here, because there's a chance that, you know, when we move into that zone over there, that the market could break structure to the downside. So keep an eye on that as a starting point. Let me just delete that Fibonacci retracement. So if we saw the market push down and break through that 49,600 level, that would be a break of structure on the short term. Or if we had a close below that 49,600 on one of these 15-minute candlesticks, that would be a break of structure in the short term and something we'd be wary of. If the market were to continue to the upside, the other thing we could still see is a potential head and shoulders, left shoulder, head, right shoulder. Very, very early days, but just bear that in the back of mind. And if that does, if on the second attempt the market then breaks structure below that 49,600, then that would certainly open up some downside targets over there. Alternatively, the market could certainly push to the upside over here. The way we'd play it at the moment is we'd wait for this break of structure to the upside, or a continuation move to the upside to confirm. If we wanted to continue with our bullish bias, and then wait for some kind of a retracement to try and get long the market. Alternatively, if the market does push below that level, a couple of ways one could play that is to take it on the, we prefer not taking it on the initial break, rather waiting for a retracement back up into structure if it does push to the downside out of the blocks. Alternatively, if it does form that head and shoulders pattern, then obviously we will wait for confirmation, break the neckline, and play that out accordingly. So nothing really off the bat to get involved in the short term, but certainly opportunities both to the long side and the short side should you want to get involved. But a classic case of if-then analysis. In other words, wait for the market to do something. If the market does, if the market pushes up through that 900 level, and then retraces, then there's an opportunity to get long. If the market breaks to the downside and then retraces back into the breakout level, then that's an opportunity to get short. So that's what we're seeing on the shorter term top 40. Let's have a look at what's happening on the international markets. Just go up to the daily quickly so we can see what's cutting over there. So rand dollar on the daily continues to chop around. Nothing specific to mention over here, to be honest. So let's go back to that hourly we initially had up on the screen. Right, so on the hourly we had that we had that push to the upside, which we highlighted last week. Then we had the retracement playing out, and notice I pulled back all the way into that 50% retracement level over there before continuing to the upside. So we're still definitely on the hourly. You know, we in a weakening trend at the moment. Continuation move to the upside playing out over there. We'd expect the market at this stage to revisit these swing highs. It has been a bit choppy over the past couple of days though, just moving sideways over here. So be wary of that, but certainly bias is towards a weaker rand based on what's happening from the price structure perspective. Let's have a look at gold. Right, daily chart of gold. The one we've been eyeballing and waiting for the continuation move to the upside to play out. We'd identify the termination of zone over there where the market could potentially pull back into that $1,300 level, then continue to the upside. It lined up nicely with a 38.2 retracement. Couple of things here. One is if you did get involved to the upside, you would probably have gotten involved with that Monday the 25th of September candle where we got a higher close, and it closes quite well, relatively close to its intraday high. But then, you know, the market simply rolled to the downside and you would have gotten stopped out of the opportunity over there. So what we're seeing at the moment is a deeper retracement playing out. So let's just do a bit of a cleanup here on these charts. So that would be an opportunity over there. And depending on your stop levels, you would probably, in all probability, have gotten stopped out because the market really didn't follow through on that continuation move to the upside. Let's clean there. Right. So what we're seeing at the moment is a deeper retracement playing out on the daily. It's actually approaching the 61.8 retracement level. Now again, this comes down to, you know, if your specific trading rules. If you got involved there on the 38.2 long trade, and you get stopped out, do your specific trading rules allow you to get involved again should the market, for example, move back into the 61.8 and then continue to the upside? Certainly, I make this point because what we have here is it's still a bullish market, and this is still just a retracement within that bullish trend. And if you look at what's happening at the moment as we approach that 61.8, there's a bit of price structure over there. Not a hell of a lot, to be honest, but there is certainly some price structure over there. Comes in around about that $1260 level. So again, you could look for potential market termination around about that 1260 level. And if that were to be the case, then you could wait for some kind of a confirmation, maybe a higher close as we saw over there on the 25th of September, or something that closes in the top end of its range depending on your trading rules, and you could look for an opportunity to get long. But for now, the market still continues in retracement. You look at that through the hourly. So this is what we're seeing on the hourly. And recall one of the things we spoke about was this breakout level over here. We said with the market pushing to the downside, we had this break of structure to the downside, or at least continuation move to the downside. Then we have this previous price structure level here, which could act as resistance, and it certainly did as the market pushed up into those levels. Then we had a well, it's effectively just let me just have a look at this price structure quickly. We got the lower close there. Yeah, had a bit of a continuation move, false continuation move over there. Then we moved into complex retracement. So if you know, a couple of things here. If you decided to get short of something like what would have been the best candlestick to try and get short here, you could have gotten short of this one over here, lower close. Depending on how you put your stops, you may have gotten your stops a bit tested as the market put in this complex retracement. But if you manage to hold on to the trade, it certainly played out pretty well, pushing to the downside over here. clean that up. And we had some good follow through as the market pushed to the downside. Right there. Get a bit of a shallow retracement there, and we continue all the way down over there. So at the moment, short term certainly on the hour through the hourly lens remains bearish for gold. Let's just clean up our charts. Where could the market push to? Let's see if there's any kind of price structure that we're working with over here. I mean, you've got some potential support around about that level over there, which we are approaching. I'm just going to do a bit of Fibonacci work here, see if there's any confluence that we can work with, so bear with me. Fibonacci projection, yeah, there's something to work with. So we're approaching a potential termination zone for this downward move over here. Notice this leg over here, 127 projection, pushes down around about into that 1268 level. At the same time, you got this line up with this previous price structure over here, so we could see some support coming in on the short term for the gold price. So this could be an interesting zone to watch. So what we're saying is there could be around about those levels over there, there could be some potential support for the gold market. But the trend, if you're just doing the trend continuation, trend following thing, certainly remains to the downside. If you're willing to go counter trend here, what I would look for is maybe some kind of a confirmation. So maybe some kind of a pattern, double bottom, something along those lines in this support zone, or potential support zone, and maybe that's an opportunity to take a counter trend trade to the upside. So just bear that in back of mind if you are wanting to make some kind of a counter trend play on the gold price. Right, let's have a look at the equity markets starting in the east. The Hang Seng. Okay, what we're doing here is we spoke about this potential, and I say potential double top because recall what we said is we wanted to see confirmation. We wanted to see the market push and close below that 20, where that midpoint is. That's how the market comes very close right there, but it doesn't close below. And instead, what we're seeing is, or what we've seen over the past few days, is we're seeing a rally playing out right there. So that double top hasn't confirmed yet. I'll buy. This is a tricky one. So through this daily lens, what we'd wait for is a couple of things. Either we'd want to see the market push and close above, these previous swing highs over there, or we'd want to see the market actually trigger that double top. Both of those plays remain viable for now. So we're gonna pretty much sit on our hands in terms of the Hang Seng and wait for push through the 28,200 or below the 27,400 for now. But certainly short term, it should be quite bullish. So if we drill down to the hourly, there we go, pushing pretty hard at the moment. Yeah, so we had that lower close up there, markets pushed down, and it actually just rolled all the way back up, broke structure to the upside. And has it even gone into retracement? Don't think it has. I suppose you could recall that as a very shallow little retracement before the break, and then it just rolls and pushes to the upside. Bit of consolidation there. Let's just have a look. Confirm. I like to get my price structure levels near perfect, or at least as perfect as it can be in terms of the rule set. because I always think it's very important to be completely objective in terms of drawing these price structures. Here we go. Okay, so we are seeing this market break to the upside on the shorter term time frame. And what we would do now is actually just wait for, this is pushed quite hard over the past couple of hours. So what we'd actually be waiting for now is some kind of a retracement to try and get involved. The breakout level, let's actually look at it. Technically, the breakout level would probably be around there. We have the break. We had a bit of a pullback into the breakout level, and then it continues to the upside. So we'd simply wait for some kind of a retracement here if we want to get involved to the long side, but bullish in the short term, most definitely. Moving further west, let's have a look at the DAX. The DAX, we were waiting for that retracement. It hasn't started to retrace. It's just been a bullish push to the upside. So let's just clean that up. It's quite a strong push. Recall the retracement we were waiting for is for confirmation of this double that double bottom over here. But to be honest, the double bottom probably pretty much played out over here for now. So any retracement here we just treat as a normal retracement. Not that there's a fundamental difference between a retracement, 61.8 retracement of a double bottom, and what we normally look for. But for now, what we'd wait for is some kind of a retracement back into previous price structure before we get involved. A bit of consolidation over there, so that might be an area to watch. We'll keep an eye on it. It's a bit premature to try and draw retracement levels at this point, given that the market's pushing to the upside quite hard. So certainly bullish on the daily there, on the DAX, on the hourly. There we go. Lovely, strong push to the upside playing out. There's some good trend here. Market pushes to the upside, puts in these little retracements as it goes, catches its breath, and then just continues to the upside again. They're very shallow retracements. Is probably one point which could be made over here. If you're not seeing those big 61.8 retracements, the market's pretty much just catching its breath and then pushing to the upside, and here we see it pushing to the upside again. So all looking very bullish in terms of what's happening on the DAX. The FTSE, come off that support level quite nicely over there. It's looking quite bullish within the range right there. Not a market we really trade on the daily time frame. Just way too messy over the past few months. Oh, great many months for that matter. But let's have a look at the hourly, see if there's something to work with over there. We spoke about this rising support level over here. Market never really came back to test it, but certainly put in this messy, we spoke about it last week, very messy, complex retracement. Said we really didn't want to touch it, and for good reason. I think if you tried to get short off any one of these legs, it would have been very difficult to see. It didn't follow through to the downside. Really just chopped all the way up over here, and eventually now it's chopped into an upside structure break, which is coming through. Let's just get that drawn in properly again. Oh, I pushed it up there. Do we get a little bit of a you could call this, let's get the exact levels in. Low 78.7, low 78.7, low 78.7. So no, not really. The market's actually just pushed to the upside and broken structure, to the upside as well. So we've got some bullish bias here on the FTSE in the short term. For now, again, we just wait for some kind of a retracement if you really want to get involved in this market. So lots of bullish equity markets around the world at the moment. Let's have a look at the big one, the US S&P, and see which way that one's going. Always open the wrong chart here, and I continue to open the wrong charts. Apologies, guys. Just bear with me. There we go. Third time lucky. So through the daily, there's the push. The US market taps up, hits new equity highs, continues to set new highs. Retracements not playing out yet, but certainly if you're just trend continuation, following over here, this is lovely. We've got some lovely trend on the daily in the US. You would have to take some stick over here when there's complex retracement, but certainly no violations of structures. Market continues to put in higher highs, higher lows, as it's been doing pretty much all year. Let's talk about potential termination levels, because this thing is very, very overbought at the moment. And I must stress potential termination levels. I'm not saying you need to necessarily go out and just short this market. But look at, just taking this last leg up here. We can see potential. We've smashed through the 127.2 projection. We've pushed through the 141.4 projection. We're now eyeballing loosely this 161.8 projection level over here, which comes in around about that 20, let's call it the 25.45 levels, or thereabouts. So that would be probably the next level to keep an eye on. See if the market can put it in some kind of a retracement off that level, but really you in unprecedented area here in terms of where the market's moving. So, but certainly maybe keep an eye on that. I wouldn't necessarily chase this market out of the blocks, because as I said, it's run very hard over the past few days on this daily time frame. But certainly I'd look for some kind of a pause, or not necessarily, as I said, to get short, but where the market could potentially start to put in some consolidation from. This is not a market that you would have been very successful in terms of getting counter trend on the daily time frame. Hourly, again, we'd identify this potential double top, but it only confirms, guys, very importantly, when we identify these patterns, they only you can only trade them once they validate, and that would have been a close below that 25.01 level. Market obviously doesn't come close to that. Sorry, and instead what we see is a very shallow little retracement over there. Just clean that up completely, and then that push to the upside. So reflected quite well in the hourly. Another shallow retracement over there, and continuation move to the upside. So again, good solid trend playing out over there. And if you want to get involved in the short term, remember I said I'm a bit wary about getting involved in the long term, but you could certainly wait for some kind of a retracement to be playing out over here, because there's some nice short-term trend in play. So that's pretty much what we're seeing at the moment, and you put all of those things together, certainly there's a definite bullish bias in floating through or evident in the markets at the moment. We may see some kind of a bit of a consolidation playing out today, but certainly it's difficult to fight against all of that bullishness in sitting in the equity markets, and we'll probably see some kind of a higher high playing out from here. So guys, that's pretty much it from our side. I wish you all the best in your trading for today and for the balance of the week. Cheers.